Why are the biggest bullion banks suddenly closing their short positions? It's not out of charity, it's not a change of heart. They are preparing for a supply crisis coming from the east. And what they are doing right now will change the silver market forever. The game has flipped. If you don't understand what's happening, you will be left behind. Ladies and gentlemen, Asian Guy here. Today, I need to show you something that the mainstream financial media refuses to cover. Because what I'm about to reveal proves that the very institutions who controlled the silver market for 40 years have quietly switched sides. They are no longer selling paper. They are buying physical. And they are doing it at a pace we have never seen before. For decades, the bullion banks dominated the short side. They sold contracts in massive volume. They pushed prices down repeatedly. They profited while stackers bled. But something changed. Something broke. And the data I'm about to show you is the proof that the old game is finished. Stop speculating. Stop guessing. The evidence is clear, and it points directly to the banks who told you silver was dead. Every Friday, the Commodity Futures Trading Commission releases a document called the Commitment of Traders Report, the COT. This is not opinion. This is not rumor. This is the official government record of who is betting what in the futures market. It tells you exactly how many contracts the commercial traders, the big banks, are holding, and the numbers that just came out are not a mistake. They are a signal. Over the past 8 weeks, the commercial short position in silver has collapsed by 47%. Let me say that again. The banks have covered nearly half of their short positions in less than 2 months. This is not normal repositioning. This is not an end-of-quarter adjustment. This is aggressive accumulation. Now understand what this means. When a bank is short silver, they profit when the price falls. They stayed short for 40 years because they dominated the market. They controlled the direction. But when a bank covers their short, they are buying. They are going long. They are betting that the price will rise. Why would the masters of the market suddenly flip? One word: positioning. Positioning is when a big player sees a major move coming and gets ahead of it. It is intelligence turned into action. The banks are positioning for something massive. They see the supply crisis building. They see the vaults emptying. They see China buying at record speed. And they made their decision. Keeping the price down is no longer profitable. The old strategy is dead. Time to switch teams. Think about this carefully. For 40 years, the banks were the house. The house always wins. But now the house is closing the casino and buying chips for themselves. When the dealer starts betting with the players, everything has changed. They are no longer selling paper. They are stacking real metal. The 47% drop in short positions means millions of ounces of buying pressure. This is not retail investors. This is not Reddit traders. This is institutional money flowing into the tightest physical market in history. And when the biggest sellers become the biggest buyers, price has only one direction: up. Now we must discuss why this is happening now. We must talk about the dragon in the room, China. For 18 months, China has been accumulating physical precious metals at an unbelievable speed. The Shanghai Gold Exchange has seen record withdrawals. The Shanghai Futures Exchange silver inventory has dropped 75%. Chinese industrial buyers are paying $8, $10, sometimes $15 premiums above Western spot price just to get metal. This is not normal buying. This is strategic stockpiling. China is preparing for something big. They are building reserves of real assets while the West plays with paper contracts. The banks see everything. They have offices in Hong Kong. They have traders in Singapore. They watch the Shanghai Premium daily. They know the physical market is separating from the paper market. They know when the East demands real metal, the West cannot deliver. Connect the dots. COMEX registered silver is at historic lows. LBMA vaults have lost metal for 24 months straight. Industrial users, solar panel makers, EV battery producers, all competing with investors for a shrinking supply. The banks did the math. They saw the truth. If they stay short, they face massive losses. If China keeps draining physical supply, there will be nothing left to deliver. Contracts will fail. Exchanges will scramble. Banks holding shorts will pay the price. So they are doing the only smart thing. They are switching sides before the storm hits. They are covering shorts. They are going long. They are front-running the greatest supply crisis in silver history. This is not theory. This is survival. And this brings me to you, the stacker, the silver believer, the person who held physical metal through years of doubt and mockery. They called you crazy. They called you outdated. They said crypto was the future and silver was a relic. But you held the line. You saw what they refused to see. You knew paper promises eventually fail. You knew 40 years of pressure could not last forever. You knew supply and demand always win in the end. And now the very banks who laughed at you are copying you. They are doing exactly what you did for years. They are converting paper to physical. They are preparing for the reset. This is your moment. This is when the smart money admits you were right. When JP Morgan covers their shorts, they are admitting the game changed. When HSBC goes long, they are confirming your belief. When the giants flip sides, the stackers win. Do not let anyone confuse you. Do not let the media tell you this is normal. A 47% drop in commercial shorts in 8 weeks is not normal. It is a turning point. It is the end of the old era and the start of something new. So what comes next? First, expect volatility. The banks may try one final price smash to shake out weak hands before the move up. Do not fall for it. Every dip is a gift. Second, watch the COT reports weekly. If commercial shorts keep dropping, the dam is breaking. We could see banks go net long for the first time in decades. Third, prepare for scarcity. When banks are buying physical, there is less for everyone else. Premiums will spike, delivery times will stretch, availability will become difficult. We are in the endgame now. The banks have revealed their hand. They are no longer fighting silver, they are riding it. If banks are accumulating physical, what does that mean for your portfolio? What does it mean for your wealth? What does it mean for the future of money? In part 2, I will show you exactly how to position yourself for what is coming. I will break down the vehicles, the timing, and the strategy institutions are using right now. Subscribe, hit the notification bell, share this video with everyone who needs to hear the truth. The banks have switched sides. The question is, have you? I am Asian guy, and the silver squeeze has only just begun.